So an average millionaire has roughly 7 streams of income, and these streams of income might not be equally spread out, but on average most millionaires have 7. But from our point of view, where we look at these millionaires, we tend to think, how can we get to where they are? So it might seem that the bar is set pretty high and almost impossible to reach. But after watching today's video, you can easily start an additional stream of income with as little as $50. Hi, my name is Jordan and welcome to the channel. So becoming a millionaire is a dream that many of us have, and that's why some of us buy the lottery, some buy heaps of Dogecoin, and some just invest in dividend stocks. And the path to a million is definitely a long one, but it's something that's achievable if you stick to a plan and continue chipping away at it. So the average millionaire has 7 streams of income, and today we are going to start on one of those streams. And having an additional stream of income will increase your net income, but you also have to have the discipline to reduce your spending so that additional income can be used to reinvest and grow that money even more. So the income stream we are going to get today is called dividend income. So believe it or not, dividend income is something that is really easy to get started on. But first, let's talk about what dividends are. A dividend is when a company distributes some of the company's earnings to its shareholders. This amount of dividends is determined by the company's board of directors, and as a shareholder, we'll get dividends as long as we hold on to the stock before the X date. Dividends are usually paid in cash, but there are some cases where dividends are paid out in shares, which will increase the number of shares that the investor has. And dividends can be paid out annually, biannually, quarterly, or even monthly. So depending on the stock that you purchase, this will also determine when you receive your dividends, which ultimately affects your cash flow and how you will do your reinvestment strategy. However, not all companies pay a dividend. So for example, Tesla does not pay dividend because they do decide to reinvest their profits back into the company, which can give them the growth that they are having. But contrasting with a company like Disney, which pays a 1.2% dividend on a semi-annual basis, this means that for every one Disney stock that you hold, you'll get roughly 1.2% of the stock value back in cash. So let's say Disney is now $100, and if you hold it for a year, you receive a total of $1.20 in cash after 12 months because of the dividend distribution. All this might sound like easy money, but do not just jump onto Google and start searching for high dividend stocks, because there are some prerequisites that you might want to take note of before buying your dividend stock. And this is where our sponsor for this video, HappyTrade, comes in. HappyTrade is the first crypto-friendly global stock investment platform that allows you to trade stocks on the Nasdaq as well as the Hong Kong Exchange. And one of the key benefits of HappyTrade is the ability to transfer stable coins like USDT directly into the HappyTrade platform and purchase your favorite stock on the Nasdaq or the Hong Kong Exchange. So the news tab on HappyTrade allows you to quickly read news updates and also shows you when this news is happening, which makes it really easy for beginners who are looking to start investing. It also shows you the latest price movement after each news update that is available for both the US and the Hong Kong markets. And there is also a page where you can see the trending stocks and the different combos that are available if you are looking to trade a particular sector or an industry. And by signing up with the link in the description down below, you'll get a free stock worth $5 when you make your first purchase of $300 in stocks. And if you purchase more than $1,000 of stocks, you will get a free stock worth up to $20. And on top of that, you do get customized market intelligence that will help you make informed trading decisions. But most importantly, always do your own research before investing any money into any investment instrument. So thank you HappyTrade for sponsoring today's video. So the first thing that we want to look out for when buying dividend stocks is how long this company has been paying dividends. And in the US market, there's a term called Dividend Aristocrats. So Dividend Aristocrats are companies in the S&P 500 that have been paying and increasing their base dividend every single year for the last 25 years. So these are curated companies and are picked based on a strict criteria, and chances are when a company makes it into the list, it's likely to stay there unless something really drastic happens. To qualify as a dividend aristocrat, the company has to be a member of the S&P 500, which means that they have to be part of the top 500 performing companies in the US. The next criteria is to have increased the per share base dividend every single year for 25 years. And if a company fails to do so, it will get taken off the Dividend Aristocrat Index, just like how AT&T was removed on the 1st of February 2022 after not increasing its dividends for the past 2 years due to pandemic. Lastly, to qualify as a dividend aristocrat, the company needs to have a minimum float-adjusted market cap of $3 billion and an average of $5 million in daily share trading value for the last 3 months. And if we look into the dividend aristocrat groups, these are companies that we know, like Procter & Gamble, who have been paying dividends for the last 65 years, and that is even longer than my mom was on earth. And then we have Coca-Cola paying dividends for 59 years, Johnson & Johnson paying dividends for 59 years, Beef paying for 50 years, Pepsi & Co paying for 49 years, McDonald's, ExxonMobil, Ecolab, and many more. So the next question that you have is, are dividend aristocrats a good investment? So to me, these are solid companies that have proven to be able to withstand recession and continuously give out dividend regardless of the market conditions. But these stocks do come at a price and the dividend payout is roughly 1 to 5%. This could be a solid play for me. But at the same time, depending on your age and financial situation, a younger person might want to go for more growth stocks to build up that bulk of wealth before moving to dividends where stocks are there to preserve your wealth. And the other thing to look out for is when investing into a dividend stock is the payout ratio. So this is one of the most important pieces of information because it tells you how much of the company's profit is being used to pay out dividends to the shareholders. The formula for payout ratio is total dividends divided by the net income. So for example, if company A has $1 earning per share and pays out 60 cents dividends per share, this would mean that the payout ratio is 60%. And company B on the other hand has a $2 earning per share but pays out $1.50 dividends per share, giving it a payout ratio of 75%. Though company B seems to be giving out more dividends, company A is only sharing 60% of its income, which gives them 40% to be reinvested back into the business, allowing it to innovate and grow the business even bigger. There is no magic number of what the payout ratio should be because depending on sectors, this number will vary. So like REITs for example or real estate investment trusts, usually a payout ratio of 90% and above. But this doesn't mean that it is not a good investment. So now let's talk about who is suitable for dividend stock investing. So if you're like me, the lazy kind of fella who wants to do nothing much but sit around and earn money, dividend stocks could be a potential play for you. Because by just holding a couple of stocks, you'll be able to get paid on a regular basis. And based on my YouTube stats, 46% of you guys who are watching are roughly 25 to 34 years old, which is around my age as well. And if we consistently invest $500 a month into dividend stocks, this will help us grow our wealth to a pretty substantial amount. So based on calculation, if we invest $500 a month into a dividend stock that gives us a 4% dividend yield, after a period of 10 years, we will have invested a total of $60,000. The crazy part here is that the dividends that we have earned and compounded is almost $13,600. Think about it, if you are 25 right now and in 10 years time at 35 years old, you essentially have a passive income stream that is continuously churning you income every single month. And at age 35, with just this one dividend portfolio will be bringing you $2,750 every single year or roughly $230 every single month. So if we scale this up a little more and really invest as much as we can. So the median salary here in Singapore is $3,500. So let's say if we invest 30%, which is roughly $1,000, and we do it consistently until we are 50 or 55 years old, which is roughly 25 years. So this will be very uncomfortable for sure because we are taking a large sum of our salary to invest into our future. But if we do it consistently, we will have invested $300,000 across a period of 25 years. But the dividends that we are getting is roughly $214,000, which is almost as much as what we have invested into the market. But do take note that this excludes any capital gains or losses if there are any, but broadly speaking, selecting an ETF or some of the dividend aristocrats might be a safe play for you. So on paper, this sounds really good, but to put into action is really tough, and as humans being, we need to find a balance in life and make sure that we enjoy ourselves as well. So in the beginning, this might give you very little dividend, but you'll start noticing that your dividend will start to grow larger and larger as time goes by. Hence, you do need to have patience for this income stream because you cannot plant a seed today and expect it to be a full-grown tree tomorrow. So thank you guys so much for watching. Don't forget to grab your free stock when you start trading with Heavy Trade. Drop a like if you haven't, subscribe for more content like this, and I'll see you in the next video.